Yeah, happy to be here today. Happy to be in New England. I came up from Pennsylvania. My name is Sarah Bay Nawa, and I'm the research coordinator for PASA Sustainable Agriculture. Kristen, do you wanna?
Yeah, and I'm Kristen Wilmer. I'm from CISA, Community Involved in Sustaining Agriculture. So we're based in South Deerfield and work with farmers in Western Massachusetts. And I've helped coordinate the local aspect of this study in the past 2 years.
Yeah, we're going to be presenting on a financial benchmark project that was started in Pennsylvania for direct market vegetable farms. CISA is now has a cohort up in New England, and there's also a cohort in the Carolinas through the Carolina Farm Stewardship Association. Um, and yeah, this is kind of maybe the headline question that we've been asking ourselves through this project, wondering about the financial viability of direct market vegetable farmers. We heard from farmers in Pennsylvania when we started this project that there wasn't a lot of information for them to know how well they were doing compared to what and compared to their peers. So that is kind of the impetus of why we started this project. And if you're not familiar with PASA Sustainable Agriculture, we are Pennsylvania based. Uh, a whole network of farmers and change makers cultivating environmentally sound, economically viable, and community focused farms and food systems. We administer ongoing research projects, farmer training and development. We do food system work and policy work um, all down in Pennsylvania and beyond.
And CISA, for those of you who aren't familiar, is a nonprofit organization based locally that started about almost 30 years ago now the was one of the oldest buy local like campaigns in the country, or the oldest. So trying to connect customers to local farms and help people see the value of a strong local food system. And so our programs are pretty far and wide at this point, but we do a lot of different kinds of work that provides business assistance and other kinds of support to farms, and also work on a range of different food access programs, like senior farm share and helping people access HIP and SNAP benefits at local farm outlets.
Okay. So there we go. And yeah, this is our acknowledgement slide. It takes a lot of people and partners to get a project like this off the ground and continuing to keep it running over time. And so, yeah, and also lots of funders to help it going. So thanks to all of them, and especially thanks to the farmers who are participating in this. They're contributing their time and information for themselves and for the wider community of farmers. So really grateful to them. And we at PASA Sustainable Agriculture put out a report in 2021 about some of our findings from the beginning part of this project, years 2017 to 2019. And we're gonna be sharing some of those insights today. But there's also the report is available on our website that you can download it for free. And we think that it's one of the most comprehensive studies of this topic so far. So encourage you to look at it. I brought a couple summary pages along that can give you the highlights of what we found so far. So feel free to come down and grab those at the end. And I also happen to have two full copies. So the three of you in the room can decide who wants one of these. And happy to give that to you. Yeah, but before we get started, curious to know, there's not many of us, so if you're willing to maybe introduce yourselves and just share if you're a farming or aspiring farmer or why you're here, you can be brief, but also who's ever online too, you could put that in the chat. So yeah, Are you willing to share?
Sure. Economics are challenging. I, like probably most other farmers, have a full-time job to support the farm.
Okay. And you, sir?
The main job is a regional secret for Highlands.
Okay. And you, sir?
Yep, name is Keith, a gardener, and just looking to take it from where I'm at, garden, and eventually go to the farm, go that route. But if I don't have the things in place now, it's not gonna get to that long. So just
Great.
looking to learn more.
Great. And thank you all. Are you all farming vegetables?
Yeah.
Okay. Great.
Are folks able to hear us on Zoom okay? Yes. Are people that are in person able to hear us okay?
Yep.
Yes.
Great. There are not so many folks in the room. That's right. Maybe the two of us could introduce ourselves as well then, if that's okay.
Sure.
Yeah, please.
Okay. Hi, would you like to go? If I pronounce your name right, I hope. Oh, okay.
Can you guys hear me?
Yeah.
Yes, my name is Haya. I was mentioning that it's hard to hear the attendees in the room when they're speaking. I'm a farmer based in the Hudson Valley, growing vegetables and flowers.
Okay, thank you. We'll try to repeat what they say as much as possible.
Sure.
And Jen, do you want to introduce yourself?
Sure. I am a farmer in the so-called Berkshires of Western Mass. I have been farming for 22 years, of which 18 of those years have been full-time farming. My husband and I started this, so we both full-time farm. And we have 6 other crew members, and we do direct market for CISA membership, of which we have over 200 shares, and we do some wholesale as well.
Awesome. Thank you all. And yeah, I'll say if any of you have questions throughout, feel free to ask them and we can address them. So I'm going to get started and then turn it over to Kristen, and we're just going to be kind of switching back and forth here. But I'm going to share kind of the backgrounds, the participants that we have in the study, and the methods that we have been using for this project. It is ongoing, and we hope that we can continue to keep it going for a good long while. This is a graph showing the number of farms, and starting with the first year that we were collecting financial information from farmers. So hovering around, a few dozen. And in total, we had 39 farms in Pennsylvania and kind of the Mid-Atlantic region contribute data for these years. And then a little bit about their farms. You can see that most of these farms are in what we call kind of the middle range for our study, 3 to 12 acres. Most of them are experienced farmers, 10 to 25 years, though we do have a nice representation of beginning farmers and then just really well-established farms greater than 25 years in operation. And we also have pretty even split between owned land and rented land. The other thing about this is that all these farms need to be, for at least some of their vegetable enterprise, direct marketing them. All these farms are highly diversified, a few dozen crops, and they're all for profit. That's how we have oriented the study thus far. So.
And just to add to direct market, that also includes selling direct to individual retailers or restaurants. So it's not just direct to consumers, but also direct to a food service, outlet.
Mhm. And in like we've been talking about in 2020, we started to expand this beyond the Pennsylvania region, and so we have CISA and CFSA that are now part of it, and they're also helping us with 2021 information. So we expanded to 51 farms in 2020, and here's the breakdown that you can see.
And one thing I'll just mention is the breakdown that you saw in the previous slide of who's participating are the farms that participated in the 27 to 2019 data year collections, but the Massachusetts cohort that joined in 2020 has a larger contingent of people in the greater than 12 acre range, so that group skews a little bit higher. And so we're gonna separately show you the numbers from 2020, which haven't yet been incorporated, published into a report until we have another year or two under our belt. But that's a little bit different, and so the information you can get from that is a little bit different.
And the way that we gather information from farmers is they fill out a survey for us for each financial year. We call it a whole farm survey. It's pretty comprehensive. We hear from farmers that it's pretty detailed. But we ask questions about their farm context, so acreage, vegetables grown, years farming. We ask for their revenues by market channels. A lot of these farms not only have vegetable enterprises, but a lot of other, they have vegetable enterprises and selling their vegetables through a lot of different market channels. And so, yeah, we'll touch on that throughout our presentation. We also gather expenses. We use the Schedule F tax form just as a commonality between all the farms. It's the one record that they likely all have in common. So that's how we've oriented this survey. But they also have to draw from other documents too, profit and loss statement, a balance sheet, and also sometimes they're just getting into their QuickBooks and their chart of accounts to give us the most accurate information that they can. Yeah, we also ask them to report out their assets and debts. So really comprehensive. We look through the surveys pretty closely, and if there's something that seems a little amiss based on what we personally know about the farm, we'll reach out and clarify, because we want this to be as accurate as possible. It's really important for the farmer and for just the greater good that we get accurate numbers. So that's how we've set it up. A couple key concepts that you'll be seeing throughout this presentation. When we refer to the vegetable enterprise, this is just the sales of fresh vegetables raised on their farm. When we refer to the farm business, that includes the vegetable enterprise plus resale activities, livestock, value added, lots of other enterprises. So there's a lot of farms in our study that might resell like vegetables from other farms, and that's included in the farm business and not the vegetable enterprise. So just to reiterate, the vegetable enterprise is only vegetables that they grow and on their farm and then sell.
May I ask a question of just clarification? I think, Kristen, you were saying that for direct sales, you were speaking of both anything that's at like a farmer's market or farm store, a CSA, as well as wholesale, local wholesale?
Yeah, as well as local direct wholesale. So
direct,
not
okay.
not anything that would be selling to a distributor or of any kind or an aggregator, but selling just to like one store or one restaurant.
Great.
So also not to like Big Wise distribution center, but to one store.
Okay, thank you for that.
Yeah.
They all, let me, no.
I just want to pause. The question was whether the farms in the study are all organic.
There's a mix. There's a mix of certified farms. There's a mix of, yeah.
The economics.
Sure. So
whether you're organic or certified or doing organic practice.
yeah, I'll say from Pennsylvania, maybe there's one farm that is a little more conventional, but uses organic practices as well. So it is largely, you know,
Yeah,
sustainable organic farm.
and that holds true for
study.
Massachusetts as well. The vast majority are organic, whether or not they're growing using organic methods. It is not true for every farm. We didn't have that as a stipulation to participate.
Yeah. And so just to pause here, we've oriented this as a benchmark study. So because like I said earlier, farmers are we're really interested in knowing how they're doing compared to their peers. And so for each year that a farmer participates, they get a comprehensive, what we call benchmark report. And so we're reporting out their numbers, indicators that we've crunched and analyzed for them based on those numbers, and in an anonymized way can share how they're doing relative to their peers. And this is how we have a couple other research programs down at PASA, and this is how we orient all of them. And it really helps also promote conversation when we bring together farmers in this project to talk and share. And so now we're going to go through some of these indicators and benchmarks. And as Kristen was saying, we have two tables on each of these slides. The kind of gold table are numbers that we're sharing from our report. So that's looking at numbers from 2017 to 2019. And these numbers have been like averaged across all three, combination of averages across all 3 years. And then in the 2020 table, those are numbers strictly for 2020, and those include results from the PASA cohort, the CISA cohort, and the CFSA cohort. 2017 to 2019 is just PASA, so just Pennsylvania. So just to orient you to what you're looking at.
And also with that, just to highlight sort of differences to keep in mind, one of which is, as I said, in the 2020 numbers, there are more farms in the 12 or more category. So although there's only 1 year, and there's a larger number of farms, so that's sort of a trade-off. It was the first year of the pandemic, clearly, so that, as we will get into later, has a lot of impacts on sales. So those are sort of the big
I have a
differences.
question. So
Sure,
sorry.
Deb.
I have a question in the Zoom chat, and I apologize if there's a bit of a delay and I'm over speaking. Someone asked, does the study do an analysis of profit margins?
Yeah,
Yes.
we will get into that. Yep.
10,
Great,
25,
thank you.
90 is what?
Yeah. So the question was asking about the percentiles, and so this is the median is basically the middle number for all the cohorts, and then we're breaking it up into the bottom 10%, how they're performing, the bottom 25%, and then the upper 75 and upper 90. So and then we have these percentiles broken out by acreage, so you can kind of really get a feel for how each size farm is performing. And yeah, so that what we're looking at is the gross vegetable enterprise revenue. And so this is showing the gross sales revenue for all vegetables grown on a farm through all market channels. So as we've alluded to, that can include farmers markets, CSAs, on-farm stores, direct wholesale to restaurants and grocery stores, institutions, and then wholesale through intermediary distributors. So, just looking at these graphs, one thing you can see is that the greater the acreage, the greater the gross revenue. And that holds true for 2020 as well. Yeah, and I think that, there's a lot of numbers to look through here. We're going to be showing you a lot of numbers. So I think this is a good thing to maybe revisit. You can rewatch this presentation or download our report, and just it's helpful to like you ruminate and reflect, because there's a lot of things to take in. So,
I have a question. You mentioned, I believe, that all the farms that were involved are growing at least a few dozen different crops. So these are all diversified mixed vegetable productions. And
correct.
is there a minimum amount that needs to be considered diversified?
No, we don't have a minimum. No, I think that, yeah, I think on average, farms are growing a couple dozen in this study, probably.
Great, thank you.
And so this is showing the gross vegetable enterprise revenue per acre now is what we're looking at in these charts. And showing the revenue that farms are generating per acre. And we're only looking at acres used for vegetable production for at least part of the year. So, woodlot acreage or farm lane acreage, even acreage with full season cover crops is not included when we're looking at these per acre numbers. And higher values, you can see, throughout this graph can reflect lots of different combinations. How are they doing this? Productive soil, better marketing opportunities, intensive management. So double cropping, really lots of successional planting. And I think that's definitely the case for farms that are on the small end in our study, less than 3 acres. They do a lot of quick turnaround crops. And I think that's, definitely reflected in these numbers.
And also speaking for the Massachusetts cohort, as far as better marketing opportunities, of course, that includes people who are growing certain high value crops that they have a particular market for, like salad greens or certain niche crops. That was a factor in our group.
And this is a table that is showing the same benchmark, gross vegetable enterprise revenue per acre, but it's plotting each of the cohorts and the values for the participating farms. So you can see that CISA are the triangles, PASA are the circles, and then Carolinas are the squares. And I don't know if it's can be it might be hard to see, but there are some boldened shapes, and those are the median values for each cohort. So this is, just gives us an indicator of how are these cohorts stacking up against each other, looking at different regions. CISA and PASA are tracking pretty closely together. The Carolinas, their gross vegetable revenue per acre is almost at 60,000 in this graph, and their median, and I think that's just the result. They have a smaller cohort, so that's why that number is higher. If they were to have more farms, I think it's likely that it would probably go down a little bit, but.
And another benefit of just looking at the data points in this way and the farms in this way is that you can see, how much were people concentrating on a certain area, or how many were there a couple of outliers in a different direction, which are sort of skewing the averages that you see. So it just gives you a sense of how consistent the data was with each region. Obviously, there's a lot of variation based on scale with this way of presenting the information.
Yeah, and so we've peppered in some questions here so that it's not just all data dumped for you. So we're going to start to dive into net income, and we're just curious if anybody, is willing to share what they think the net income per acre for a typical vegetable farm is. You can give a range. You don't have to give a specific number, but.
And that's the net vegetable enterprise income only. So looking at vegetable income per acre in vegetables.
Yeah, right. Yeah, the comment was, is this a negative or positive number?
And it certainly depends on the year. In 2021, we had, as you all may know, a terrible growing season here. But in 2020, this year, the number was quite positive across the board.
Well, you also had I assume you had pandemic effects, right? A lot of people rushed farm that never even knew it existed.
Yeah, so you're pointing out as this shows, there were a lot of pandemic income benefits in the early year of the pandemic, in particular for direct market farms.
This is a question where you direct marketing, you don't count grants, right? That's separate.
That's not included in the vegetable
Grants, right?
enterprise. Yeah.
Grant income is included in the overall farm business income, but we specifically excluded COVID-related relief because we felt as though that was a really atypical year and
But
kind of relief.
also NCR.
NRCS or other
Mhm.
grants would be included only in the total farm business income, but not in the vegetable part here.
Mhm.
There's a couple of comments here in the chat. One being, it depends if all labor expenses are included. And then there was a question of, are all farm manager owner salaries included?
Yeah, good questions. The labor expenses are included, but for this study, when we're looking at net income, we've extracted the farm owner salaries to give a truer picture. So we'll be able to share some examples of that moving forward. Yeah.
We will have numbers that cover all of those ways of looking at it, but this particular number excludes farm owner salary or any unpaid family labor from the number. So this would just be the net income, including only payroll expenses as the labor costs. Would anybody like to throw out a number, or should we just show you the result?
Okay. So these are the results that we have. Again, 2017 to 2019 is Pennsylvania farms represented in the gold box, and then you can see the 2020 numbers in the green box. And interesting to see those differences. There was some improvement. You know, this isn't completely apples to apples, but some of the numbers in 2020 do look better. But to your comment, there is some negative net income and per acre for vegetable enterprise. And so, yeah, this is calculating the revenue subtracted from the operating expenses and then dividing by vegetable acreage. Yeah.
How's depreciation handled?
Yeah, so depreciation was included in 2017 to 2019, but depreciation was not included in 2020 because some of those numbers were kind of high due to COVID relief funds, so not included in 2020.
Okay.
Yeah. Yeah.
That's a
And
huge leap from 2017, 2019 to, I mean, just looking, well, I'm looking at the 3 acres or less. What do you attribute that to?
yeah, I think it could, yeah, I'd be interested to see 2017 to 2019 numbers without depreciation, but I mean, I do think that some of it is COVID related and that there were more small farms were having more sales.
Yeah, I mean, that's why I asked the depreciation
Yeah.
question, because it
Mhm.
can be huge
Yeah.
number, right?
Mm-hmm.
If I don't want to use the word hobby farm, let us say passion farm, but you have a full-time job, you know, and you bought this thing for $500,000 and you can depreciate it, that's a big expense.
Mm-hmm. Yeah, yeah. So sometimes we, when we're looking for through specific farms, if they have like really large depreciation, sometimes for the farmer, we've teased that out a little bit more for them so they can see some of that. But yeah, your comment is accurate. Depreciation can skew things. Yeah.
So sometimes we've got a grant to put up a greenhouse.
Mm-hmm.
So you might be able to write off that greenhouse all 1 year. And if you're not counting grant income, but then you're counting the depreciation, it would create that's why I think your numbers are much better in 2020, not counting depreciation, because that's something that can be easily manipulated.
Right.
But
Right.
as you were saying, if for 2017 to 2019, you did look out for when there were outlier depreciations, like people depreciating large amounts in 1 year, and then trying to adjust that. We did that also for 2020, that when we initially started collecting people's depreciation, we tried to sort of balance it out. But then just with COVID, it was so skewed that it was really hard to get an apples to apples comparison. So we wanted to keep the group more uniform in the comparisons.
Yeah, I think we'll definitely consider that and revisit that. We're still working on gathering 2021 numbers, and so we'll take a hard look and see, yeah, how we want to do depreciation. Maybe we'll report it both ways if the farmers are interested to see it that way. Yeah. So,
Um,
We've tried to increase our ability to collect it in a more standardized way, but that is challenging. So we'll look at that.
to maybe add on that challenge part, there's a question of what if the farmer owner is drawing a salary on payroll?
yeah, so we have the farmer exclude those numbers in their reports. So depending on how how if they're like a S corp or a C corp, right? One of those legal definitions, they might have their salary included in payroll, but we extract all of that out. So it's apples to apples across farms. Yeah. So yeah, there's a lot of back and forth sometimes with the farmers just to really make sure we're getting accurate representation.
Are farmers getting paid to be participating in this?
Yeah, I think it depends on the cohort. But so for Pennsylvania, we've been giving farmers a stipend to participate.
Locally, we haven't given a stipend. It's a low stipend, which is acknowledging the time put in, but also there's a pretty sizable benefit in getting access to business assistance related to this project. And looking at your numbers, we've provided one-on-one assistance to farms in this area who've participated in looking at things. And also, I think the benefits of being able to look at your numbers in the context of this larger group and the smaller group can be very valuable, and local farms participating have found that very valuable. So we have provided that as the benefit, not a cash stipend.
Now, and I guess bring it up, hopefully it is being recorded. I say, taxes. So when state and local tax deductions got limited or went away, on advice of my accountant, he's like, well, you got a farm. What, so throw it all into the farm business, that expense. Did you notice a big property tax thing? Because that would be an expense, but it's, let's just say it's a shifting expense. It's something someone might have taken privately and now they push it over onto their business.
I can't speak for property taxes in Massachusetts, but yeah, I think that we try to catch those things. Yeah.
Yeah, we have different categories and try to look and make sure that they're sort of comparable across the board. But as far as how that might have changed the group from 2019 to 2020, I can't speak to that.
I have a question.
Yeah.
I was the one asking the questions about the farmer owner drawing a salary or not. Am I understanding this right? If those numbers are excluded, then if I'm looking at what you're showing now on the screen, does that mean that, let's say, a farmer with a median income farming under 3 acres, that there is around $6,000 left over for the farmer owner to count as a salary?
Yes.
Yeah, that's
So
correct.
the conclusion I'm drawing is that these are kind of depressing numbers for a farmer owner or manager.
Yeah, they're definitely it's sobering to see these numbers, to see them on paper. Yeah, it speaks to lots of challenges that farmers have.
Doesn't,
Yeah.
I mean, I seem to see the numbers that the USDA, of course, I mean, they are just relentless. If you don't fill out their form, are calling you, so it's easier to fill out their forms. I thought they were showing farms under 250,000 gross at net negative income for the last few years.
Yeah, I didn't see those USDA numbers, so
To repeat the question,
Yeah.
there was a question about how
I said, I understand.
I'm just saying it into the microphone because I'm not sure it can be heard. There was a question about the USDA or maybe the NASS statistics reporting a net loss with farms grossing quite a bit of $250,000 and more. And had we
What's left?
under $250,000. Yeah, and it generally reflects my understanding that the net there are many farms reported in the NASS reported as having a loss. And that reflects a wide range of farms who may or may not, whose farms may serve a very, many different roles in their respective households and livelihoods. So
yeah, one thing to keep in mind is that we're still looking just at the vegetable enterprise. And so there's, a lot of these farms are diversified with several enterprises, and so those numbers are going to come later. So, but this is just looking at vegetable enterprises. And I can speak for some farms in Pennsylvania that are highly diversified in enterprises, and they know that their vegetable enterprise is kind of like it's a loss compared to some of the other ones. It's not, that's just the way that they have operated their businesses. But yeah, so that is, uh, some of the, part of the story behind some of these numbers for some farms. Not all of them, of course. So yeah.
yeah, and I think as we go through, you'll see a lot of different pieces of the puzzle of how this
Yeah.
fits together,
Yeah.
and different stories will be told.
Oh, we can go back.
You have 3 acres in production, what you're really saying is then for 2020, the farmer made $18,600 average, median, the one in the middle.
Yep.
Yeah, so there's a clarification of in 2020, what you're really saying is if a farm had 2 acres,
Let's say under 3, yeah.
or under 3 acres in production, then they made somewhere below $27,000 in production, on average.
Yeah, for their vegetables.
So
Right.
yeah, 9,300 times 3, so it would be a maximum of about 2,700,
right.
27,000. Yeah.
Oh, isn't that? Yeah, so the next benchmark here is looking at net income to revenue ratio. And this is basically how much are farmers translating revenue into their net. So profit margins, and I also look at this, we also look at this as kind of an efficiency indicator. How efficient are they at translating revenue into net income? And so the numbers here that are showing negative, that means that the farm is at a loss. And we've, for farms to have enough money to, farmers have enough money to pay themselves and to invest in their operation. We're saying that, above 20% is kind of the target for them. So and some farms are reaching that, but there's a lot of farms in the project that are not yet.
Skip over the net income slide.
Maybe
Which sort of answers the question.
yeah, I think maybe I skipped over this, but this is, we were talking a little bit about this. This is the net income now. So looking at the total acreage
So this is answering your question from earlier a little bit about what actually was the median total net income from the vegetable enterprise at these different scales. So in 2020, that was in fact around 18,000 for the smallest of farms. And it was much lower in the 2017 to 2019 study years.
Yeah, and so again, this is looking at the net income to revenue ratio for across the cohort. So you can see it's it's pretty spread out. Different farms in the project are really excelling and some are not doing as well for their vegetable enterprise. So, and I think with that, oh, I'm going to turn it over to Kristen now, and she's going to go through the rest of the indicators before we get into some insights.
Wait, will you advance the slides there for me?
Yep.
Okay, so now we're getting into the total farm business net income. So this is, instead of just including the vegetable enterprise income, this now includes a large number of other kinds of enterprises, the most common of which is resale that people are doing at their market outlets. It also includes grant income in a small number of cases, but it does not include any kind of specific COVID relief grant income. So this gives a more complete picture of how farms are piecing together different income streams to make their farms profitable and meet their needs. So in the Pennsylvania study years, again, as everything is showing, the incomes were much lower early pre-pandemic in the 2017 to 2019 period, ranging from around 6,000 for the smallest farms on average to 81,000 for the largest farms. In our 2020 study year, that was far greater for the total farm business income, so ranging from 37,000 for the smallest farms to 149,000 for the largest farms. I should specify that these, when we're talking about the farm business net income, we're still having these charts which use the breakdown in size by vegetable acres, so that we can be consistent with the earlier slides. So when it says less than 3 acres, 3 to 12 acres, and greater than 12 acres, that's still just referring to the number of vegetable acres. But it takes out pieces of the picture. So it is not necessarily a direct relationship with the number of acres in total production that a farm has. So in some cases, a farm might have another enterprise of livestock or Christmas trees or something else that takes a number of acres. So then we start also, we've been looking at including the labor, including the farm owner labor and the unpaid family labor, all the paid family labor, all the paid payroll, outside labor. We looked at how many hours need to be invested per acre on average with farms. And so I'm wondering if anybody wants to throw out numbers.
Per year?
So this is per year. How many people does it take per acre? And hours is an easier way of looking at it because a person can work either 100 hours, or they can work 100,000 acres, 100,000 hours in a year. Right. So for a farm in the 3 to 12 acre scale, does anybody want to put out a guess of how many hours per year per vegetable acre might be required?
Well, you shut down in the winter, you're counting most times.
Yeah.
25 or 30, of course.
25 or 30 per week on average, or in the winter?
Counting the winter where it's maybe 0 or 2-3 acres, in the summer where it's 70 acres.
Yeah. Yeah. So on average, maybe 70 hours of labor per acre in the main growing season, and then 30 hours per week or so in the off season. So what we saw in the 2020 numbers are that the under 3 acre farm had about 1.25 FTEs. These are full-time equivalents, is what you're seeing in this chart. So a full-time equivalent is equal to about 40 hours per week year-round, 2,000 hours per year. So that ends up on the smallest farms equaling about 2,500 hours per acre per year. Whereas on the largest farms, that's around 850 hours per acre per year. So there's a pretty big spread there, obviously, as one might expect, and how much labor is invested, depending on the acreage grown at the farm.
question for you.
Sure.
The FTEs, that's just to get to break even?
No, so these are the actual number of hours invested at each of these farms. So the question was, is this the number of hours to break even? It's actually just the number of hours that were invested. So as you saw at the earlier slides, some farms broke even, some farms had a loss, many farms had a net gain. So it's irrespective of your net income, just how many hours did the farms invest per acre?
Yeah, it's to put the 2,000 hours in context, that equates to 40 hours a week
Year round.
year round, if that helps. Yeah.
But it's usually split 70 in the summer and 10
Right.
in the winter.
Yeah.
Right.
We
And
have,
this accounts for that split.
Yeah.
People sort of totaled their estimated input over the course of the whole year. So that's a standard full-time job. So for a very small farm, it's just over one standard full-time worker required per year, but obviously seasonally it's different. And then for the largest farms, it's a little under half of a standard full-time worker
That's per acre, right? So
per acre in vegetables. Sorry?
if you had 3 acres in production and you're small, you need 4 people.
Exactly. So if you had 3 acres in production, you would, according to this metric, on average, you would need about 4 people, four full-time workers. In reality, it ends up often being 1 or 2 farmers who work a lot more hours per year, or some unpaid family work.
Oh, I just wanted to check. I'm not sure if we're hearing everybody. I'm hearing one predominant voice, so I'm wondering if there are other people that have questions, or if maybe we're not hearing the other people speaking.
So yeah, Keith is in the middle of the question, and just making sure you guys are repeating back the questions when possible. Go ahead.
So is that
Thank you.
40 hours, is that for regardless of if it's one crop, if it's just corn, or is that 40 hours per corn, per wheat, per
Yeah,
vegetable?
so the question was if the number of hours reflected here is dependent at all on the number of crops people are working with in here. But so this is just across the board. So in each of these cases, especially true of the smaller farms, these are pretty diversified farms. So on each of these acres, there's a number of different crops grown, and this is the average number of hours invested to take care of those many different crops.
I guess something also that came up, you covered it. Do you think the group you have is really a sample, right? Do you think it's a representative sample of what's out there, or are these the people who are a little bit better? Because I'll be honest, when I've spoken with farmers, and I really commend what you've done here, they're kind of embarrassed to say I'm a total failure. I mean, like, oh my God, I'm just losing I'm not going to tell anybody how bad I'm doing. So I'm curious if you think that this sample is representative, or maybe it's even skewed to the ones doing a little bit better than the average.
So the question was how representative we think this sample is as far as what incomes people are making and drawing from the farm. And you are voicing an assumption that maybe these are a little better than average because people are willing to share their numbers.
Right.
And I can speak for the Massachusetts cohort, and I'll let Sarah speak for the broader groups and the previous data in the study. But for the Massachusetts cohort, there is a bar to participating, which requires that you have a certain level of financial accounting and a certain level of record keeping that can fill out all of the many questions that we ask people in this study. And so I think that is certainly a requirement that means that this is not a representative sample 100%. It's people who are able to track their numbers more precisely. And I think that does have a correlation with people who are able to earn more profit because they're able to analyze their numbers more and adjust their farm accordingly. And this is definitely a group of people who are trying extremely hard to be profitable. So it's not necessarily the average. I think that's true of many farms, but I think also this is a group of people who really are focused on their vegetable enterprise and really want to be making that enterprise successful. So in that way, I think, yeah, it's not a representative sample, but it is, I think, a somewhat representative sample of people in that group who are working hard at getting profit out of their vegetable enterprise and who have good record keeping.
Yeah, and
Oh, go
No,
ahead.
yeah.
As far as Pennsylvania and how representative is this, very just probably similar situation to Massachusetts in that there is a bar that one needs, some organization of records in order to complete the survey successfully. And that usually also means that they have to have been in business for a couple years to get those systems worked out. But yeah, I think these are farmers that really want to make a go at earning their living from farming, and so they're trying really hard, and I think it's a good cohort in that way. These are the farmers that are trying, and these are the benchmarks that we're discovering from that group of farms that we do consider successful and growing year after year, improving year after year. So yeah.
I there was a comment in the chat about there seems to be a direct correlation between number of labor hours and gross revenue per acre, as an observation. And then I was just wondering if you could reiterate those hours. I believe I heard that on less than 3 acres, it was 2,500 hours per acre per
Yeah,
year.
that's correct. So 2,500 hours per acre per year was the median for farms less than 3 acres. For farms in the 3 to 12 acre realm, it was 1,300 hours per acre per year. And for
Okay.
farms greater than 12 acres, the median was 850 hours per acre per year.
That's fascinating. I mean, it's hard for me to not correlate that with various forms of mechanization. And I'm just thinking of quick numbers at our farm, which is completely hand scale, and that we have. I'm going to go back and look at the numbers more closely. It's exciting for me to think this way, but I think we average about 8,000 hours per year on a hand scale level.
Mm-hmm. Yeah, it definitely is strongly related to the amount of mechanization. And
Yeah.
I think some amount of efficiency gain, just broadly speaking, from if you're a larger farm, you're doing a lot of the same, like you have tasks that repeat. You have a field of 3 acres of tomatoes. And so all those different tasks involved with tomatoes or other kinds of things, like you can be doing them at once in a way that saves time somewhat that you lose if you go between vegetables and different crops. So I think those are the two factors playing a role.
Mm. There's a question in the chat that says, does this include hours spent at the computer, bookkeeping, crop planning, etc.?
Yes, so this is a total accounting of all hours spent by all of the paid and all of the unpaid and employees and owners at the farm. Yeah, question in the back.
Okay.
This, unlike the others, is taking owner operator hours
Yep.
into effect.
Yep, exactly. So this, unlike the previous slide, the earlier slide is taking owner hours into account as well as all other paid hours. Okay, so the next thing we're gonna talk about from benchmarks is the overall number. So labor is just a huge piece of the expenses on vegetable operations, and I think this study, that had always been in my experience from all my vegetable farming years of experience and what I've heard from the farms I work with. But this study really helped to put some numbers to that, which I found valuable. Does anybody want to throw out a number? So if you take the total gross revenue of farms, what percentage of that gets immediately spent on paid labor at a farm? So let's take a larger farm in this example. So where the vast majority of your labor and payroll is actually, reflected in payroll. So for a greater than 12 acre farm, do you have any guesses percentage on just how much percent of your total revenue you take and immediately pay to employees? 65 or 75%, or so yeah, for a larger farm. So it's not quite that much. It is definitely hands down the single greatest expense of every larger farm in this study. So in the 27 to 2019 years of the study, for this number for very small farms, it's a much lower percentage, and in some cases 0, because basically what that is saying is just that the farm owner or unpaid labor or family labor is what's carrying the entire farm. So in
that number was exorbitantly high, including the labor. And that's why I asked the question.
In the previous slide, the number was very high. Yeah, so hopefully it's including all things. So this slide, yes, was including all owner and paid labor. And this slide is just including paid labor. So as you would hope and expect, the percentages are lower on smaller farms that don't have as high payroll expenses.
Are you adding in workers' comp? Are you adding in taxes, payroll taxes?
Yeah.
Cash payments?
Yeah, so we are adding in any form of payment. This doesn't have to be the numbers that you have in QuickBooks. This is the numbers that are the real amount of dollars that you spend on labor. Yes, it does not include workers' comp, which is separate in our tracking, which is something we've talked about how to deal with that in future study years. Do you want to speak to the other details of the 20 or anything more about the costs in 2017 to 2019 of how it was tracked? Or
I think it was no, I think it was tracked pretty similar from 2017 to 2019 and 2020.
okay,
Yeah.
yep. Yeah, so it does not include workers' comp. It does not include unemployment insurance. So those are two potentially large expense on some farms and smaller expenses on many other farms that are not included in this percentage. So this is a low bar of it may be higher than this if you account for those expenses. It does include other employee benefits, like people can include in there other kinds of benefits that they
So on a small, oh, sorry.
for a littler farm, you're not including the owners in here. So this does not include owner salary. That was extracted for every farm, no matter how you accounted it on your taxes. So just looking quickly through these numbers, and then Jen, I'll let you ask a question there as well. So for the larger farms where that is a more accurate reflection, I think, of the money going to labor expenses, that in the 2017 to 2019 years, that was just about exactly a third of expenses. In the 2020 year, which had a larger number of farms in that higher, greater than 12-acre scale range, so I think these might be slightly accurate numbers and more locally specific numbers, but only from 1 year. That number was about 38%. And I'm going to go to the next slide. I'm going to go to the next slide here, which shows the spread between the 3 different regions. And you can see, so the CISA region is in triangles at the top. And you can see pretty clearly that, there are a couple of outlier farms that are quite small and don't have high payroll to revenue ratio there. So high payroll expenses, but you see a lot of triangles skewed in the 40 and plus range, somewhere between 40 and 50%. So I think that's a pretty accurate assessment for the participants in 2020 in Massachusetts area of what the actual percent of expenses paid towards payroll was. So quite large. Jen, did you want to ask a question or?
Yeah, thank you. I think it helps hearing actually what you just said, that 40 to 50% range makes a little bit more sense to me. The median was really throwing me off, particularly for the small scale size. And to me, then I look at that thinking just how much this the 12% for less than 3 acres or 26% in 2020 is representative of a really significant amount of unpaid labor potentially. And just how that contributes to the narrative of a food system that is built on stolen land and stolen people, forced labor. I mean, the continuum is very very much alive and well. So that was just coming up for me on a more philosophical level about just how incredibly broken our system is.
Yeah, thanks for that contribution. And I think this is really this is at the crux of a lot of local debate and like enormous tension around trying to figure out how to deal with the fact that this is, when working with farmers, like this is your single highest expense by far if you're a vegetable farm. So this is a really top priority for cost cutting at a farm. A lot of this work is already minimum wage or very close to minimum wage labor. We did ask people in this study to report the entry level wages or the average wages for field workers and also for people in managerial positions. These are not high wages and they're still very high expenses. So in thinking about how to move, like the question we ask in this study is can direct market farms be profitable? A lot of these slides are referring to can they be profitable for an owner and their partners? And another enormous question is where is the room here to be able to, like, how do you tweak this system so that it can be more just on a much broader scale of everybody earning livelihoods from farms? So I think that's really crucial.
At least at my farm, we provide housing, and I haven't calculated one dime of cost, and I'm in a high cost, not an outrageously high cost, but a fairly high cost area. Which, you know, so did this count housing? Because
so there's a question about whether the payroll costs here include housing expenses that you might have if you're housing your employees on the farm, and I'll let you answer that as a broader.
Yeah. So for farms that were, they consider housing. Some firms consider housing as part of payroll, and it's significant. That is included. And some firms even there are other perks too that are included in that as well.
So generally speaking, employee benefits are included. So that might be paying for travel if people are coming from far away to the country. It might be paying for housing. It might be food or transportation expenses of other kinds. So that was asked for, and people did provide that in this
Kristen,
number.
When you speak to minimum wage, are you speaking of minimum wage for farm workers or the state minimum wage for every other position?
I'm speaking to the state minimum wage.
Okay.
Our experience working with farms locally is it's becoming very, very rare for anybody to be earning under the state minimum wage, just for many reasons, but just because it is an extremely tight labor market and has been for a long time. It's not easy to find people to work on farms. And so I think that is a control against anything going lower than a certain amount. Also, for any of the larger farms, it's fairly common for vegetable farms locally to have H2A workers, which also has a certain threshold of prevailing wage that people have to pay to all of their workers then at the farm. So that also controls some of the wage pressure here for farm workers.
And
thank you.
I'll share in Pennsylvania too that the threshold seems to be state minimum wage. There's nothing.
Which in future years, I mean, I'm in Connecticut and Massachusetts, same thing. It's $15 or approaching $15 an hour.
Yeah. Yep. So $15 an hour in Massachusetts. 14 in the year of the study, I believe it was $13.50 in 2020. It has increased the last few years by 75 cents per year, but there are also farms participating from Connecticut and Rhode Island in this group.
I have a question going back to the FTEs, just to be sure if I'm quite understanding this properly.
Sure.
Going back to those numbers, I was just thinking about, we're talking about the median on farms that have 3 acres or less being 1.25 FTEs over the calendar year. But thinking about, obviously, a farm would want to be in the 90th percentile in terms of revenue. So if I'm looking at these numbers, am I understanding it right that in order to be in the 90th percentile, what you found is that on a farm that's 3 acres or less, it would take 3.83 FTE hours per year to spent on labor in order to be in that 90th percentile?
So completely sure I understand the question, but those percentiles there are just, yes, they're reflecting the number of labor hours put in. So the 3.83 FTEs is at the farm that is in the 90th percentile of labor hours, not necessarily the 90th percentile of any other metric like income. But yeah, so the farms that were investing the most labor hours per acre were close to 4 FTEs per acre in the study.
Yeah. And yeah, sometimes I think that for percentiles, we track like the higher percentiles is like the best, but I think it's not necessarily the case for all of these, especially in labor. That farm probably has really, really high payroll, and yeah, not sure how that translates into their net earnings, but that's definitely yeah, could be a
Oh,
negative.
so
Yeah.
this is not related to what we saw earlier about the farms and their, oh, okay, this is not
No, yeah, so
correlated.
each of these benchmarks, the percentiles for each benchmark just reflect the spread for that particular benchmark. So they don't, so that, those farms that have really high hours per acre may have a large number of high tunnels over their couple of acres. So that might be much higher income and much higher labor invested, or it might be similar to other farms and it might just be that they have a less efficient operation, and less profit overall. So each of these benchmarks in isolation doesn't tell you anything about the given farm business. So really, when we're working with farms in this study, we're looking at how all of these benchmarks fit together on any given farm and what that means about the different strategic opportunities for trying to shift things to
Right.
attain better profitability or better livelihoods at the farm.
So to be clear, if I, for example, have a farm where I'm farming 2 acres intensively, I shouldn't look at these numbers and assume that I will need 3.83 people times 2 acres, which would translate into thousands of hours per year in order to reach a certain level of revenue. This is no correlation with that.
Yeah, I think there's enormous variation. This gives sort of a ballpark. If you are farming extremely intensively in the most intensive 10% of farms, there is a chance you will need somewhere around that number. It's sort of a guidepost, but definitely not a foolproof rule. There's a lot of variables, that affect this on any given farm.
Of course. Okay, thank you.
Sure.
There's a family.
Okay, and so the last slide here I wanted to go into is the total vegetable enterprise rate of return on farm owner labor. So this teases apart. This adds more to the puzzle from the conversation about how many hours people are putting in and what the net income is, and gives you a sense of how much per hour farm owners and all of the unpaid labor or family labor at a farm is, what the return is on that labor. So if you look at the median there, the rate of return is approximately, this is the annual rate of return, so it's very low on farms less than 3 acre. This is per FTE. So per standard 40-hour job invested on those smallest farms, it was about $1,400, $1,500 of income per FTE put into the farm in the early years of the study in Pennsylvania. For the largest farms, per FTE, that was about $35,000 a year. And so to put this in context, a vegetable enterprise rate of return on farm owner labor at 20,000, say you're making 20,000 over the course of the year per FTE, that translates into about $10 per hour. So the $34,000 there in the median of the largest farms is a little over $15 per hour of return. I'm gonna go, and I think we don't have the local numbers on that at this point. So they would be higher in the local numbers for 2020.
Yeah, this is just reflecting Pennsylvania farmers. Maybe you had said that.
Yeah.
So yeah, we don't have much time left, but we definitely want to try to share as many of these insights as we can. So this is when we're kind of looking at all these different numbers and, compare it against each other in different ways. So we'll try to get through as many as we can. Now, most of these insights are coming from the PASA report. So this is just looking at Pennsylvania from years 2017 to 2019 and those vegetable farms. And so this first graph, we maybe like suspected this, but that no market channel is a clear winner. But yeah, this is what we ultimately have found, that basically, farms are, depending on a lot of different reasons, they're, figuring out what works best for them and their location in terms of marketing. And it's not necessarily the same for, each farm. So this graph is looking at the y-axis is vegetable enterprise gross revenue by market channel, and you can see each color represents a different market channel. And then the bottom is vegetable enterprises ranked by net income. So you can see that in terms of diversity, some of the farms with higher net income, there's a little less diversity in market channels, and in the farms with lower income, there is more of a mix. And then to put this in context, the most profitable vegetable enterprise had an average net income of about $192,000. And so that's on the far right of this graph. And then the least profitable had an average net income of about negative $42,000. So
On farm store or fruit stand.
yeah, or like an online store. The question was, what are other direct markets? So yeah, online store, on-farm store would fall into that.
Most
Yeah.
commonly farm stands and farm stores.
Yeah. So yeah, basically, there's not one ultimate strategy. Farmers figure out what works for them as far as market channels. This next graph is talking about basically production scales and the relationship between scale and profit. So we're looking, if we just focus on the graph on the left for right now, we are looking at the vegetable net income to revenue ratio on the y-axis. So that's, kind of profit margin efficiency indicator. And then we're looking at the vegetables in acres and vegetable production on the x-axis. So what this is showing us is that there's not, because it's a straight line, there's not a consistent correlation between the number of acres and the ability for the vegetable enterprise to translate revenue into that net income. So basically, yeah, their profit margins. And so, there's a lot of variation up in on the above and below that line. But this is suggesting that farmers can achieve similar profit margins across a range of production scales. And, that's really important to keep track of your profit margin and your efficiency. But then when we're looking at the graph now on the right, we're looking at a vegetable enterprise net income on the y-axis compared to the acres in vegetable production on the x-axis, and you can see that that line is trending upwards. So that means that there is a positive correlation between the acres in vegetable production and the amount of net income a farm earns. So this is what we've been finding. Basically, yeah, larger farms are earning more net income. And these points on these graphs, there's a note here on this slide, but each data point is the mean value for each farm, averaged over all the years, 2017 to 2019, for which we have data for that farm. So only farms that we have data for those 3 years are included in these graphs, so that we're, yeah, looking apples to apples here, year to year. And so this next set of graphs is exploring more of the efficiency on the farm. So the graph on the, and that's, we're looking at the graph on the left now. And so we're looking at, again, that net income to revenue ratio on the y-axis, and then the x-axis is the percent of farm business revenues from the vegetable enterprise. So, you know, there is some variation, but there is a positive correlation here, in that farms with a higher degree of focus in vegetable production do tend to have a higher profit margin, and thus, you know, likely to be maybe a little more profitable in their vegetable enterprise, because they're specializing so much in their vegetable enterprise, and that leads to, you know, natural efficiencies.
Say specialize, only doing one or two, or just one vegetable?
Oh, it's, yeah, the question was, does vegetable enterprise mean, yeah, is it meaning one vegetable, or, and we're looking at all of the vegetables grown, so we're not distinguishing. It's basically that these farms are focusing more on growing their own vegetables as opposed to maybe reselling, or also having livestock or other enterprises. And so then when we're looking at the graph, on the right, we're seeing that, we're looking at farm business revenues from the vegetable enterprise again, and looking at farm business net income. So we're seeing a straight line, so that means that there is, no correlation. So it doesn't necessarily mean that, for farms that have a strong focus in vegetable enterprise, it doesn't necessarily mean that that's translating into a higher net income. But what we would want to point out is that, there are, you know, examples, as we can see from the dots on this graph, of farms that are doing quite well with diversifying into different enterprises. And the most common is reselling other produce or other products from farms. Other profitable enterprises, again, this is just Pennsylvania farms, are looking at nursery and, growing ornamental plants, on-farm events, pastured livestock. And so some of the most profitable farms in our study made more than 20% of their revenue from other enterprises. So, there's room for both.
Did you try to measure, I call it more ecotourism, not really farming, but it might be a wedding venue, Airbnb.
Yeah, so the question was, are we looking at ecotourism, agritourism? So we haven't specifically asked for the numbers on all the different enterprises, but those events are lumped into the total farm business net income. Yeah. And yeah, this graph, or these tables now, are just kind of reinforcing the fact that there are, other opportunities for, vegetable farms to be making money. So these are now just looking at numbers from 2020, and you can see the graph below is the vegetable enterprise net income, and then the graph above is the farm business net income. So you can see that for most of the farms in the study, they're obviously getting money beyond just the vegetable enterprise. So
Per acre?
It's total. Yep.
total net,
Not per
yep.
acre.
And am I doing the next
Yes.
slide, Kristen? I'll just touch on this quickly. Quickly running out of time. This is showing that, you know, the longer a farm tends to be, in business, the higher income and equity that their business will generate. And so the graph on the left is showing that it can take about 10 years, though, for a farm in Pennsylvania to reach The dotted line shows the median household income of Pennsylvania. So it's looking like it's taking about 10 years for new farms to reach that threshold of, I think it's about $57,000. But the graph on the right is showing that, equity can come a lot quicker, because you're making a lot of capital investments.
And just to clarify for this slide, there is some confounding factor here because the farms that are in business for longer and are able to stay in business for longer are those with greater profit typically. So that's some of what is factoring into this effect also. So just in the last couple of minutes, I just wanted to really quickly go through and give a little bit of numbers to attach to this idea of the COVID year in 2020 really affecting farms really dramatically. And we have a little bit of information here to tease apart how that happened. So this data, the next couple of charts, all applies to just the 20 farms that participated, shared their numbers both for 2019 and 2020. And all but one of those was outside of our area, was in Pennsylvania. So you can see here, the chart on the left is the gross vegetable revenue per acre. And for all of the different scales of farms, with blue farms being the littlest, the green being the middle, and the pink being the large farms. The net vegetable enterprise income is in the middle, and the net farm business income is on the right side. So generally, most farms showed an improvement in revenues and income in 2020 compared to 2019. Larger farms saw the biggest benefit in income, and mid-sized farms showed the least benefit in income due to the COVID pandemic in 2020. So basically, smaller and larger farms did the best from the pandemic. The next chart just teases apart how different market channels changed, and I think this definitely bears out what our experience has been in Massachusetts, which is that restaurant sales plummeted, farmers market sales decreased largely because there were breaks and when markets had closures and then had really restrictive requirements for customers that reduced traffic at stands in the early years of the months of the pandemic. Direct wholesale is the DWS here, and that decreased the largest. Intermediate wholesale, somewhat to my surprise, and this group of study participants didn't decrease, and it increased in some cases in the case of larger farms. So I think overall we saw that retail sales did well, but food service sales suffered. But many of the farms in our area were able to shift markets to accommodate that. CSAs were the very hands down winners far and away during the pandemic in all of the regions, I think. We saw that very clearly here, that almost all CSAs had an increase in sales in 2020 compared with 2019. And that was preserved to some extent in 2021, but it has been a smaller effect in the second year of the pandemic. So then just our last couple of slides here of this question, coming back to it, can farmers make a middle-class living growing vegetables? So again, this is reflecting the net income and the income to the owners and family and household of the farm, but not looking at the employees at a farm. But so for this chart here is showing just for the 2020 numbers, we collected off-farm business income for the first time. So income that was not coming from the farm at all contributes a lot to the total household income of most of the farms taking part in the study. There's a cluster of dots here down at the 0 mark at the very bottom that were earning no off-farm income. And that holds true at all different scales. But for the most part, all of these dots that are up higher, ranging from $0 to $125,000, reflect people who are earning substantial off-farm income to contribute to their household. And so this next slide just summarizes a lot of different numbers. at the top, this is just taking out the vegetable enterprise income and separating it from any of the other farm income or off-farm income. And so these are the numbers just for 2020 again, because that's when we started collecting all of the off-farm numbers. So for the smallest farms, the median net income, again, is just under 20,000. For mid-sized farms, it's just over 20,000. And then for the largest farms, it's much higher. For the study year, around $75,000. The chart below that compares those numbers to the median household income, and also to the farm business as a whole, and also the on-farm and off-farm household income of study participants. So the top line is the median net farm income for participants in the study from their whole farm, and that was somewhere around 55,000 or so. The total median household income for for farms participating in the study was much higher, around 90,000. And so the three bars below that are the median household income for Massachusetts, for Pennsylvania, and for North Carolina. So you can basically see that for study participants, their median household income, including all on-farm and all off-farm income, is higher than the median household income. So that's the reality of many people in this subset, and potentially not representative subset of people taking part in this study. But the net income coming from the farm is somewhere in the middle there. It's hovering around median farm income, lower than the Massachusetts farm income. But for the vegetable enterprise in isolation, if you're less than 12 acres, people were earning much less than the median income from their vegetable enterprise alone. But again, those numbers have to be viewed in the context of the fact that many people intentionally diversify their operation and their income streams. So we don't know how this fits in to everybody's individual goals of why they have diversified in the way that they have. So I think we're at the end of our time. We're a few minutes over.
Yeah. There's just a few other slides. I don't know if you're willing to hear them. Yeah. Okay.
Yes, please.
Okay. So we know that this is a hard topic. These numbers are definitely are hard to look at. So, but at PASA we're seeing, well, how can we manipulate some of create exercises to and figure out ways that farmers can within their businesses improve their net income. And so that's what I'm going to go through quickly. And we've identified maybe like 3 key ways, if we're just thinking it on like a simplified level of how can we boost up the income. And so we're looking at the gross revenue per acre, which could be intensity. How much, how many dollars are you getting per acre? We could look at scale, on how many acres are you growing? And we could look at the vegetable net income to revenue ratio. So that's the efficiency indicator that we're looking at. So we're just going to go through a quick exercise for these 3 pathways. And here we're looking at a baseline, baseline farm. This is an example. These are not numbers that are coming directly from our data, but there you can see what we're starting out with. And so, right, how do we want to boost up that net income to the PA median household income, which is about 57,000? So this first example is saying, if you have the systems and you have the mechanization and the acreage, you could increase your scale, because we've seen that's, more acres in vegetable production can increase your net income. The other pathway is increasing intensity. So if you're on a smaller scale, you don't want to hire a lot of off-farm labor, try just increasing the gross revenue per acre and see if you can boost your income that way. And then increase efficiency is the last one. And so just really honing your systems, maybe maybe focusing more on your vegetable enterprise, maybe a little less if you have a couple others that you want to keep, because as we're saying, there's some advantages to having diversified enterprises, but yeah, just really honing in on your systems can be really important to increasing your net income is one way. So,
And as we saw in this study, the two other pathways very commonly used are to have other enterprises that are profitable that complement the vegetable enterprise, and then to have off-farm household income, which is something that works well for many and is not in everybody's goals. So there are different pathways to how people are making this work.
You did this scenario planning when timeframe?
This is hypothetical.
This is an example. These numbers aren't coming from, yeah.
This thing called hyperinflation.
Yeah, right.
And freak out at what I'm sure the cost of seeds is going to be, and shipping costs, and we're already paying $5.50 for diesel fuel.
Right. Yeah. So yeah, that's a good comment. The comment was that there's lots of inflation happening right now, and this example exercise this was created for our report, which was before the pandemic. Yeah, because of higher costs. Yeah. Yeah. Yeah, there's a lot of different factors these days.
Yeah. And locally in our area, the cost of housing and transportation have increased so much that are two fundamental expenses that employees are facing. And so that is a huge factor in imagining how you can be, with labor expenses, this very large expense on vegetable farms, how you can be compensating people in a way that enables people to make a living. Inflation is hugely affecting both labor costs and what it takes to make a livelihood, as well as fertilizer expenses, and each of these other expenses has skyrocketed locally in the last 2 years. So
yeah, so we are definitely out of time. Really appreciate you hanging on with us and being such a great engaging audience. This is a reminder you can visit the PASA website to download the full report. And yeah, I don't know, Kristen, you can speak to what's going on up here, but for Pennsylvania, I think I'm the only PA person here, but we are always looking for firms to join our study. And I don't know if you
and locally, please connect with us.
Yeah. And there's our contact information
if you're interested in taking part.
Yeah. So again, thank you so much. Really appreciate your attention and being able to share this with you, and hope that it was a valuable session for you today. And yeah, come down for paper copies of the report and the summary as well.
And the
slides
in person as well, if you'd like very small versions of the slides here.
Yeah. Thank you so much.
Thank you so much, Sarah and Kristen. This is really phenomenal. You got my brain turning in all sorts of ways. I'll definitely be in touch with you, Kristen. And thank you everyone for working in this hybrid option. It was really helpful.